Welcome back, everyone, for another deep dive. This time we're looking at dividend-paying stocks, 3 companies in particular who just announced dividend increases. AbbVie, Visa, and Comfort Systems USA. One of these is actually a bit of a surprise play on the AI craze, so stick around for that one. But first, you might be thinking, why should I care about dividends? Well, dividends can be a great source of passive income. They can potentially limit your losses if the market takes a dip. And they can give you some insights into a company's financial health and how committed they are to their shareholders. All good things, right?
Absolutely. And it's especially interesting that these 3 companies, even though they're in completely different sectors, are all choosing to boost those dividends right now. Seems to me like they're feeling pretty good about their future earnings.
Okay, let's start with Comfort Systems USA, ticker symbol FFX. They do HVAC systems, heating, ventilation, and air conditioning. And they have a Zacks rank number 2 buy. So analysts are generally feeling pretty bullish on their stock.
Yeah, but here's where things get interesting. FFX isn't just installing those AC units in your average office building. They're also a big player when it comes to data centers. And as you know, data centers are essential for all this AI stuff. Those AI systems generate a ton of heat, so they need some serious cooling to keep them running.
Right. Everyone's focused on the fancy algorithms and the software side of AI, but someone has to make sure the servers don't overheat. And that's where FAX comes in. And their financials are really backing up this AI thing. They just increased their dividend by 17%. Their 5-year annualized dividend growth rate is 28%. And analysts have raised their earning estimates by 45% in the last year. Not too shabby.
Not bad at all. Looks like FXX has a pretty strategic place in this data center market, and those dividend increases are definitely a sign that they're sharing their success with their shareholders. But
right.
Like any investment, there are risks. We should look into how dominant they actually are in this data center cooling market, who they're competing with, and if there are any other cooling technologies coming out that could change their growth.
Good point. Always have to consider the other side of things. Okay, now for a company you probably use almost every day, Visa. Credit cards, debit cards, digital payments. They pretty much rule the payments industry. And like FXX, they have a Zacks rank number 2 buy.
Visa is such a fascinating case. Even when the economy isn't looking so good, people still have to buy things, groceries, gas, clothes, all the essentials. And every time someone uses their Visa card, Visa gets a cut. Their payment volume grew 8% year over year last quarter, and the number of transactions they processed went up by 10%. Talk about a steady business.
For sure. And they just raised their dividend by 13%. Yeah. So the quarterly payout is now $0.59 share. Now, I know some people might be wondering, isn't everything going digital? What about all these fintech companies that are trying to change the way we pay for things?
That's a great question. It's true that things are changing fast in finance. But Visa's not just sitting around. They're investing in AI and other cool new technologies to improve their security, to make their customers happier, and to make things run better behind the scenes. It might be worth looking into how they're actually using AI and what other companies could challenge them in the future.
Sounds like a plan. Okay, now for our last dividend all-star, AbbVie. They've been doing incredibly well this year. Their stock price has gone up by 34% since January.
And that stock performance is mainly because of their earnings, which have been great thanks to their blockbuster drugs, Skyrizi and Rinvoq. Those treat conditions like plaque psoriasis and rheumatoid arthritis. And sales have been through the roof, up 51% and 45% respectively, compared to last year.
Wow, those are some serious numbers. It's amazing how these drugs are really making a difference for people and at the same time bringing in huge profits. And speaking of profits, they didn't just meet earnings expectations. They completely blew them out of the water. And they even raised their earnings guidance for the rest of the year. That's basically them saying, hey, we think things are going to keep going great. And they're putting their money where their mouth is with a 5.8% dividend increase.
For sure. It shows that they're really committed to giving back to their shareholders. But of course, there's always some risk. We should look into how much AbbVie depends on these 2 big drugs. What happens when the patents on them run out? What other new drugs are they working on? And how could AI be used in their research and development? Maybe to help bring new treatments to market faster. These are all important questions that investors need to think about.
Okay, so we've got Comfort Systems going along with the AI trend, Visa adapting to the changing world of finance, and AbbVie coming up with life-saving medicines. But before we get into too much detail, let's zoom out and look at the bigger picture. What do these 3 companies and their dividend increases tell us about the market as a whole right now? What can we learn from them when it comes to figuring out other dividend-paying stocks?
That's a really good question, and it's one we'll talk more about next. We'll also talk about some key metrics besides just the amount of the dividend. Things like the dividend payout ratio, debt levels, historical dividend growth trends, and how those compare to the averages in their industries. Those can give you a better idea of how financially healthy a company is and how likely they are to keep paying those dividends for a long time.
Sounds good to me.
Yeah.
Let's get right back into it.
All right.
Okay, so we've got these three companies all doing pretty well in their own ways, but they're all raising their dividends. What are some of the things we can look at to see if they can actually keep paying those dividends over time?
Well, one important metric is the dividend payout ratio. This basically tells you what percentage of a company's earnings they're paying out as dividends. A lower ratio usually means the company has more room to keep those dividends coming or even increase them in the future, even if their earnings go up and down a bit. But a really high ratio could be a warning sign, especially if the company runs into some trouble.
So it's kind of like making sure they're not spending all their money on dividends and leaving some for investing back into the business or to help them get through tough times.
Exactly. Another thing to look at is debt. If a company has a ton of debt, a lot of their earnings might be going toward interest payments, which leaves less for dividends. So you always want to check how much debt a company has and how that's been changing.
That makes sense. And you mentioned looking at how dividends have grown in the past. Why is that important?
It can give you an idea of how committed the company is to sharing profits with its shareholders. Have they been raising their dividends steadily over time? Or has it been all over the place? If they've got a long history of steadily increasing their dividend, that can be a good sign. It could mean they're financially stable and focused on giving value back to investors.
So it's not just about how much the dividend is right now. It's also about how it's been trending over time.
Yeah.
And you said comparing these numbers to industry averages is important. Why is that?
Right, because every industry is different. Some industries are just naturally more profitable, and some have earnings that go up and down a lot more. So comparing a company's numbers to its peers can help you see where it stands in its industry.
Okay, I'm starting to get the picture. It's not just about going after the highest dividend yield. It's about looking at the whole financial picture and understanding if a company can actually keep paying those dividends for a long time.
Exactly. And remember, all these metrics are just pieces of the puzzle. You also need to consider things like what the competition is like for that company, their potential for growth, and any risks they might be facing.
Right, like we talked about with comfort systems and those new cooling technologies.
Yeah.
Speaking of which, I think it's time to get back to our three companies and see how they stack up against some of these metrics.
I agree. Let's start with Comfort Systems. They're kind of a specialized company focused on that data center cooling market.
Yeah.
Now, data centers are definitely a hot area right now, but how much of the market does FX actually have? Are they the main player, or are there others we need to know about?
Yeah. What about those new cooling technologies? Are there any solutions coming out that could disrupt their business in the future? These are the things investors should be thinking about.
Absolutely. Okay, now let's switch gears to Visa. They're obviously a huge player in the payments world, but even giants can face challenges. We mentioned those fintech companies that are trying to shake things up. So how's Visa actually using AI to stay ahead? Are they incorporating it into their systems effectively to make things more secure, to give customers better experiences, and maybe even create some new ways to make money?
Right. It's one thing to say you're investing in AI, but it's another to actually use it in a way that gets results. And what about their dividend sustainability? With all these new companies getting into the market, can Visa keep up with that amazing dividend growth they've had in the past?
Those are all really good questions. And lastly, we have AbbVie. With their blockbuster drugs and their stock doing so well, but like we talked about, depending too much on just a few products can be risky. So what does their pipeline of new drugs look like? Are they putting a lot of money into research and development to create the next generation of treatments?
And how could AI play a role in that? Could it help them find new drugs faster, potentially make development cheaper, and maybe even lead to more effective therapies? That's definitely something investors would be interested in.
For sure. And we should also look at those key metrics we talked about earlier. What's their dividend payout ratio? How much debt are they carrying? How does their history of dividend growth compare to other companies in the pharmaceutical industry? All of these can give us valuable insights into their financial health and their ability to reward shareholders over the long run.
All right. So we've talked about a lot, but I think we need to address the big thing that keeps coming up, AI. We talked about how Comfort Systems is benefiting from the AI boom and how Visa is using AI to adapt to the changing world of finance. But what about the bigger picture? How does AI affect dividend-paying stocks overall? Is this something investors should really be paying attention to?
Absolutely. AI is not just a trend that's going to fade away. It's changing everything. It's already changing industries and creating winners and losers. And as investors, we need to understand how AI is affecting the companies we're looking at, both in terms of their potential for growth and the risks they might face.
So how can we tell if a company is ready for AI? What are some things to look for?
Well, one thing is to look at how they're actually using AI in their business. Are they just talking about it, or are they really putting it into practice to make things more efficient, to create new products or services, or to get an advantage over their competition?
And what about the potential downsides of AI? Are there companies that could be hurt by AI?
Oh, for sure. AI could completely disrupt entire industries. Think about self-driving cars and what they could do to the transportation sector. Or AI-powered legal software that could automate a lot of the work lawyers do now. Those are just a couple of examples of how AI could replace jobs and maybe even hurt the earnings of some companies.
So it's a two-sided coin. AI has both good and bad potential, and investors need to be smart enough to see both.
Exactly. And that brings us back to our three companies. We've discussed how they're each doing their own thing in the current market. But now it's time to take it a step further and connect them to this bigger story of AI. How might the growth of AI affect them in the long term? And what kinds of opportunities could that create for investors who are looking for both growth and income?
Okay, back to our dividend trio. We've got Comfort Systems, our AI infrastructure play, Visa, the payments giant, sort of dipping their toes into the AI world, and AbbVie, the pharmaceutical company that might be using AI to make drug development better. Let's start with Comfort Systems. Their connection to AI seems pretty straightforward.
Yeah, it seems like that, right? As AI keeps getting better and more people use it, the demand for data centers is only going to go up, and those servers need to stay cool. That's where Comfort Systems fits in.
Right, so it seems like they're in a good spot to take advantage of this whole AI boom. But like we said before, we can't just assume they're automatically going to be the winner. What's the competition like in the data center cooling market?
That's a good question. They're a big player. But they're not the only one. There are other established companies they're going up against. And new companies could pop up with some brand new cooling tech. Comfort Systems needs to be thinking ahead. They need to invest in research and development to stay ahead of the game.
Yeah, they can't just sit back and relax. They need to keep coming up with new stuff to stay competitive. Okay, let's move on to Visa. Their connection to AI might not be as obvious as Comfort Systems, but they're definitely paying attention. How are they using AI to their advantage in this fast-changing world of finance?
Well, they're not building AI robots or anything like that, but they're being smart about adding AI to their current systems. They're using it to get better at catching fraud, to personalize customer experiences, and even to make things run more smoothly behind the scenes.
So even though they're not creating the newest AI themselves, they're still using it in smart ways to stay relevant and keep up with the competition. But what about all those fintech disruptors we talked about? How is Visa dealing with those challenges?
That's the big question, isn't it? Fintechs are quick and innovative, and they're always pushing the limits in the world of finance. Visa needs to figure out how to work with them, buy them, or even beat them at their own game if they want to stay on top.
That's a tough game to play. And speaking of high stakes, let's talk about AbbVie. They're literally in the business of saving lives. How does AI play a role in their world?
It's amazing how AI is changing healthcare. AI could really speed up the process of finding new drugs for AbbVie, which would mean faster development times, lower costs, and maybe even treatments that work better. Think about what that could mean for people.
That's pretty incredible. But as we said before, they rely a lot on just a few blockbuster drugs. What's their plan for the future? Are they investing in new drugs to make sure they keep growing and paying those great dividends?
That's where their commitment to research and development is important. They have to keep working on the next generation of therapies. And AI can help with that. It can help them analyze tons of data, find promising drug candidates, and even predict possible side effects.
So AI is kind of like their secret weapon in the race to develop life-saving treatments. But we can't forget about the financial side of things. Are they in a good enough financial position to keep those dividends coming, especially with all the money they're putting into research and development?
That's where those important metrics we talked about come in. The dividend payout ratio, debt levels, historical dividend growth trends. Investors need to look at those numbers carefully to figure out if AbbVie is financially stable and if they can keep increasing those dividends consistently.
Right. It's not just about the dividend right now. It's about understanding what things look like in the long run. Okay, we've covered a lot with these three companies and how they're handling this world of AI. But before we wrap up, I want to leave our listeners with something to think about.
I always like a good question to ponder.
All right, here it is. As AI keeps changing things so fast, what industries do you think will be most affected? And what opportunities will there be for investors who can spot those changes early on?
That's a great question, and it's definitely something we'll be watching closely as this whole AI thing keeps unfolding. It's a time of big changes and big opportunities. For those who are ready for the unknown, the future looks pretty exciting.
That's a great place to end. Thanks for joining us for this deep dive into dividend-paying stocks in the ever-changing world of AI. Remember, knowledge is power. The more you know about these things, the better prepared you'll be to make smart investment decisions. Happy investing, everyone.